Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Night video for July 19th, 2018. And we're talking retail, specifically one of the strongest sectors of 2018, the retail sector, the consumer discretionary, which we're seeing here. And within it, retail names are making higher highs. We'll take a look at two different components inside the index for opportunities for the future. The first few stocks we'll see are going to be in trading ranges at the highs nearing a potential future breakout. Otherwise, these names will keep in their trading range against resistance. And then we'll end the briefing with 3 to 4 names of breakout candidates already breaking out, and some, like Costco, continue to extend their bullish gains. But first, we'll begin with the broader XLY, and it's the consumer discretionary. It just made a new high at the 112 level, just shy of 114 per share. It is above its June high. It's above also the February high. So again, we're looking at this from a relative strength perspective. And this bullish run up here in June, strong movement, caught our attention on a breakout. So remember, stocks go through periods of range contraction or sideways action. But if you're swing trading or trying to play some momentum stocks, look for things breaking out under the guise that which is strong tends to get stronger. And we just had a pullback, took the price back toward the highs. We'll drill inside consumer discretionary on the sector ETF to the retail sector. That's XRT. Notice that it's not quite caught up. So it's a little bit beneath the high. We're not saying all these stocks are going to break out. We're saying if this retail sector can break higher, in this case above 51 per share, it probably will do so on the backs of multiple companies, one of which is Target, breaking also to new highs. So we'll see if that continues and changes this dynamic of range breakout, momentum play, additional upside action, bullish maneuvers through some open air, or if the range resistance holds. We'll start with Target. Now these stocks have come up on our low ADX scan. That scans for stocks that are compressed and specifically in sideways trading ranges. Target is one of them. Its ADX right now is 9.36. That's low. Anything under 15 is considered a low and range compressed candidate. So Target here, we see its 78.50 level, just shy of 79 per share, and 80 is a critical resistance level. We as traders like breakout opportunities and breakout candidates because what happens after a consolidation tends to be a breakout activity. We do not necessarily want to predict which way that's going to go, but if these shares can break above $80, that probably leads to an additional upside squeeze. And if they fall beneath 75.50 or even 76, that could send us lower to keep this trading range going. So we see we have a neutral setup. We don't predict. We're going to trade any type of breakout beyond these trendline levels. JWN is Nordstrom. Not that much different from Target's price pattern. Now its level is 54 per share and about 52. Again, what happens next probably will be a breakout maneuver, either to the upside with a short squeeze rally. We can look back toward November, December, and then into January for prior examples of extended upside range expansion. And if that doesn't happen, we have a downside future play away from 51.50. Takes us back to the range low at the target 46.50 level. Best Buy, BBY, has its position at 78 per share. That is a critical resistance level, just shy of 80. We want to see this above 80 with strong bullish volume, and that would give us confidence of a potential future breakout. But until that breakout happens, notice that this and other candidates have turned down away from their recent resistance, and that is 78 per share. That would open a downside swing trade pathway to keep the range going toward 70 per share. Michael Kors, this is clearly in a trading range, and it also comes in with a low ADX. This is 11.4. You can see the trade setting up. It's a departure trade. That's going to be a breakthrough beyond 70 on high volume, is a range expansion play. But until that happens, we expect continuity in this range, and that takes us down to a little smaller pivot, not quite as large as the other candidates, towards 60 and 61 per share. Now we're starting to see things get interesting with ROST stores. Notice how it doesn't really have a trading range. This thing continues higher. Higher highs, higher lows, higher highs, higher lows. And this actually did break to a new swing high above 87. We want to keep our focus on this and other similar patterns in the retail sector to see if this continues. Note how volume is not necessarily strong, and so we will have a fade or a failure outcome. That's a bearish play away from 87, stop above 88, and that plays us back towards 80. That's roughly going to be the 200-day simple moving average and a little trend line that connects toward 80 per share. Keeping pace with these strong retail names, American Eagle, AEO. Its spot to watch is 24.50, just shy of 25 per share. It is into range resistance. We take a look at how that plays out. On the right side of the chart, I always show you the hourly chart. That's mostly for swing traders and intraday traders, but the bigger picture is always on the left. Might even call that the anchor chart. That's what gives us our parameters. It is 24.75, just shy of 25 per share. Once again, we look at sectors because if we get the big picture correct, most stocks within a sector will do what the broader sector does. So if all these names break through, we have candidates aplenty to pick the breakouts to trade. Otherwise, we have fade or short sell opportunities from their respective resistance. And we'll finish up with our dear friend Costco, COST, with respect to its continual uptrend. This is our recent fade trade, a few days down to the moving average, and the bullish opportunity up away from it. We're not getting a fade, we're getting continued upside action, this time on higher volume. So keep closely watching Costco as it continues to move toward 220, possibly above it. Now, why are we doing these scans and what's interesting about them? Costco shows us we have a breakout opportunity at 200 per share. Costco remained in a little triangle for the bulk of 2018, but once it broke above, it stalled a little bit above it, but went strongly higher, pushing $20 higher the last few months, last couple of months, above 200 per share. And that is a swing trade breakout opportunity. It also gives us multiple sessions of intraday trades on a lower frame to buy those pullbacks on the way up. And of course, fades on the way down and bullish trades on the way up. We'll finish up with the ES. Again, retail is stronger because it is above the February high and keeps making higher highs and higher lows. But it's into resistance, so we're watching that closely while the S&P trails behind. This is Corey Rosenblum, and you're watching the TheoTrade Nightly Video for July 19th, 2018.